This is James Tech with today's Autochartist Euro chart pattern analysis for Friday, May 11, 2012. Let's look at the action this week in the Euro US dollar Forex symbol EUR USD using a top-down perspective. The Euro began the week trading inside of a potentially bearish descending triangle chart pattern on the 1440-minute chart. During the first trading session of the week, the Euro broke through the support line with a gap, completing the pattern and setting up a potential move down to the Autochartist target zone at 128.17. Not only was the descending triangle chart pattern a sign of lower markets to follow, but the series of lower tops and lower bottoms satisfied conventional chart pattern watchers that the main trend was down and that the currency pair was poised to move lower. Prior to the breakout to the downside, the Euro had established support along this 130 area. Now that the price has pierced this level, it should become new resistance. With the Euro clearly indicating weakness, the only technical factor that is missing is downside momentum. If momentum begins to increase along with selling volume, then the Euro is likely to continue down the rest of the week into the Autochartist target zone. Now that we've covered the 1400-minute chart, or the larger time period, let's take a look at what Autochartist's chart pattern recognition program has to say about the 240-minute or intermediate time frame. Because of oversold conditions earlier in the week after breaking the 130 area, the Euro did not attract the selling pressure one would have expected when it broke through the major support at 130. This set up a falling wedge chart pattern on the 240-minute chart. Now, though the currency pair tried to rally or tried to break out through the resistance line, counter-trend traders wouldn't bite on the move and the breakout failed. With the Euro falling back into the falling wedge chart pattern and threatening new lows to end the week, traders have to conclude that this currency pair is in a weak position and likely to resume its firmly established downtrend. The intermediate chart pattern shows the importance of the 130 area as resistance. Now, looking at another chart pattern to give us an even shorter term perspective of the market, short-term technical analysis of the Euro using the 30-minute chart and the Autochartist key levels technical tool clearly show that the market is in a weak position. Not only has the currency pair broken through a support level, but it has kept its lower top and lower bottom pattern intact. Since old bottoms we have here and here tend to become new resistance, this short-term chart pattern should be watched carefully, because regaining this key level at 129.24 could mean that sentiment is shifting back to the upside and that the market is gearing up for a short covering rally. So as we end the week, we should pay attention to the 129.24 area for a short-term picture, as well as the 130 area way up here for the bigger picture. Again, regaining the short-term picture at 129.24 late in the trading session on Friday could mean that traders are taking profits ahead of the weekend. However, if we do pull away and break below 129 or into this target zone, we may even go all the way down to 128.17, which was our original downside target to start the week. This has been James Tech with today's Autochartist Euro chart pattern analysis for Friday, May 11th.